Hey guys, I spent some time detailing how a real professional day trader reads and analyzes price. Now, even though this video may seem a little boring, I strongly encourage y'all to watch as I really do believe that this will help a lot in your trading journey. So sit back, relax, get some popcorn, and enjoy. Yo, what is up guys? Welcome back. This video I'm going to be outlining the use of liquidity and a liquidity seeking strategy to help us find and formulate some really nice trade ideas. It's how I'm able to find trades like this, or even this. Okay, now without further ado, let's begin. Let's say you're looking at the charts on Monday over here, and you're just like, yo, how can I use liquidity and how can I use this strategy to find where price is going to go? So first thing what you want to do is go on a higher time frame to outline keys areas of interest. So the higher time frame you're on, the more relevant and the more strong that area is. Okay, so right now we're on a daily chart, and what we can see in price is this all-time high from Nasdaq on the left, and it seems like we're reaching towards it. What we can also see is that there's this wick, and whenever there's wicks of relevance, we can run a fib on it. And the reason why I choose this wick instead of this top one or the one under it is because this one is the closest to the one we are at right now. We could use this one, the one that made the all-time high, but it's still kind of far, so the closest wick to us is chosen. Now what we do is we run a fib, and then we use ICT's consequent encouragement, and it's 50% of this fib. And what that does is it tells us whether or not price respects it. So for example, if price respects this level of consequent encouragement, it means that we might not get strong rallies into the all-time highs just yet, and we might retrace a little bit before we reach up. However, if this consequent encouragement is ignored, it'll probably tell us that we're probably going to go higher and into this high. We can also kind of think of this high as a liquidity magnet. So what does that mean? Since this is a swing high, and it's a very significant swing high as it is the all-time high of Nasdaq, a lot of traders would be taking on short positions and having their stop loss here. So there's going to be so many traders who have stop losses at this swing high, so that banks and the market makers might want to push the market up, hitting these traders' stop losses, so then the traders' stop losses will become profit for banks. We can think of this as an area of lots of stop losses and an area of liquidity. Okay, so now we kind of have a general bias and a kind of general mindset of what today's session is going to be like. We're either going to hit this 50% level, and if we respect it, we might retrace. Respecting it meaning that we're not going to go above this 50% of the wick. However, if we do, that probably will tell us that we're going to go towards this swing high. Okay, now back on the minute chart, it is 8 o'clock. Since we're trading indices, times of importance is very important. So what does that mean? So right now on the screen, I have outlined two significant times events when you're trading indices. So the first one is 9:30, that's pretty obvious. That is the equity open. So what the equity open does is that it can inject liquidity into the market, and it can run stops really quick, basically making the market more volatile. Secondly, we have 9:50 to 10:10. This area of time is ICT's macro. What that means is you could be expecting price to go higher, but when 9:50 comes and that's into 10:10, we could get a whole 20 minutes of retracement, and then after 10:10, we keep going higher. So obviously this doesn't occur every single day, but it is still important and it occurs enough times for us to be aware of it. Even though if it doesn't occur today, we should still be aware of possible retracements from 9:50 to 10:10. Okay, now with that being said, let's start looking at price. Okay, so from the daily chart, we still see that daily consequent encouragement level, the 50% of the wick, is still pretty far away, right? And it's only 9 o'clock. So right now, we're not going to be really trading. We're just going to see and wait whether or not it gets up there and what it does. We don't want to be impulsive just yet. Okay, right now I've skipped to 9:30, and again, we're still not there at this level. If we zoom out a little bit more, there really is nothing left on there's nothing much on the 15-minute chart, 30-minute chart. It's just all from that daily chart. So let's keep playing. Let's see what happens at 10 o'clock or 9:50. Okay, so from 9 o'clock to 950, we see that we're reaching up into this area of consequent encouragement. So right now, for today, the macros don't really apply simply just because we don't have strong targets yet. We're not sure whether or not it's going to respect this level, and we're not even in a trade. So again, the time for macros just for today is not really going to apply. Now, another important time that I didn't talk about is 10 o'clock. 10 o'clock marks the first half an hour of trading since equity. And usually some days you'll get manipulation, where from 9:30 to 10 o'clock, the market moves in one direction. And right at 10 o'clock, half an hour after equity, we're going to show its true colors and its true bias. So for today, we see that price runs up into this area of consequent encouragement, and it seems as if it respects it. We get so close, we don't even touch it, and that shows weakness. That paired alongside with the fact that it's 10 o'clock, sometimes you get 30 minutes of manipulation and kind of tell us that maybe today is a time for retracement instead of aiming for the all-time highs on Nasdaq. So given this, now we're kind of confident that we want to go short. We have a general idea of going short. Let's outline some targets. So using the same concept of liquidity, we can see that this 9:30 candle generated a swing low. This swing low, on par with the half hour of manipulation, could have enticed a lot of traders to be taking longs. So traders might think that market will be going higher and they'll be taking longs. Their stop losses will all be at this swing low. So if we know we want to go short, we could be targeting this swing low. There's a lot of liquidity down here, and it might be nice for us to aim and try to hit this area. Another area of liquidity could be these kind of equal lows from the Asian session from 7 o'clock. Again, this works. This works. These equal lows kind of work as well as these equal lows. But when we're trading this in real life, realistically, we're not too sure how far it's going to retrace. Because again, the general bias for the daily chart is to be hitting the all-time highs. It's just that today we might get some retracement. We probably want to have our main target here. So maybe if this gets hit, we'll take off 75% of the position. And then if the rest of these swing lows get hit, then we'll be very happy. But again, since we're not too sure how far it's going to retrace, we should just aim for the lowest hanging fruit, make your money and get out. So that being said, once it's 10 o'clock and once we see that price and the candles don't even hit this consequent encouragement area, it gets so close, we can be kind of comfortable taking shorts. So here, we could have shorts. Our stop could be here, where this consequent encouragement area is. We could just have a simple 1 to 3. So let's see what price does. Okay, so let's say you're in this right now and you have your trade, and right now you see a price that's retracing against you, and it can be scary, right? And I would be too, right? I'd be thinking, oh, what if I'm wrong? What if we do hit this daily consequent encouragement level? But again, we've already made up our mind and our trade idea. If we're wrong about that, we're just gonna have to live with it. And that's just a part of trading, right? Having one idea and stick to it. If it's wrong, then it's wrong. But the worst thing you can do is half-ass it. If you half-ass it, you're not gonna really do well in this industry. So we're gonna keep stop at here because this is the area of importance. If it doesn't hit this consequent encouragement level, our trade idea is still a go. Funny enough, right when it hits break even, we go down lower and we do hit our targets. So this would be 70% of the initial trade. Once this target is hit and once we've made some money, we can reduce stop to break even now. Now it doesn't matter if it goes up and then even goes down lower, right? We told ourselves that if it hits break even, we're out. It's okay, we've made money. It's just a mindset. Now if we keep playing, we'll see that price eventually meanders around for the entire PM session, and it'll eventually go back to a break even. And that's completely fine, right? We went into a position, our targets have been hit, we've taken the majority of the position off, and we've made money today. That's what matters. What the market told us when it didn't go lower is these swing lows that we've outlined here probably aren't that relevant, right? Because if it wanted to hit these swing lows, it would have been on the same day. So the fact that the market only hitting this swing low and retracing back higher will tell us that for tomorrow, we're probably going to break this level of the consequent encouragement and go higher towards the all-time highs on NASDAQ. Okay, so on Tuesday, before the session even begins, we have the daily consequent encouragement level, this key level that we're keeping an eye on. But what we also see is that there have been new candles from the Monday session. So what we did on the daily chart, we can kind of do it again, and we can see and we can use this wick, it's consequent, and use it as a level of key interest, I guess. So this would be on a 15-minute chart, and we'd call it 15-minute consequent encouragement. Again, this is just a level where it tells us whether or not price is going to go up higher or lower. So if it respects this level and it doesn't break above it, we probably want to see shorts. However, if it breaks above it and there's targets to the buy side, it'll probably tell us to go long. If there's no targets to the buy side and there's no reason to go higher, this level would be kind of irrelevant to taking longs, right? If there's targets to go short, then we look at it to see if it's respected. But if it's not, and if there's no targets, then we probably wouldn't be even looking at this at all. It's just simply because we're almost at the daily all-time highs on NASDAQ, we'd be focused on this. Okay, now let's drop down to a minute chart and let's see from the perspective of trading this live. Okay, so you're probably going to be starting to be at your charts by 9 o'clock. And right now we can see that before the equity open at 9:30, we're already ranging and we're rallying up higher. So an important time to note is 9:30 because it is an injection of liquidity. And it's important to see what happens because if 9:30 takes this higher, then we could probably be looking at longs. However, if it takes it lower, then it tells us that longs might not be the way to go and it might be shorts. Right? Even though we have the bias of taking longs from Monday, from yesterday, we don't want to force our will upon the market, right? We could be thinking to hopefully end up taking longs in the back of our head, but we don't want to be acting impulsively. We want to see if the charts give us what we want, and then we can take longs. However, if that doesn't happen, we just sit tight and not do much. Sometimes the best trades are the ones that you don't take. Again, just going over this one more time, another key time event would be 10 o'clock and the 9:50 to 10:10 macro. 10 o'clock just represents the half an hour of manipulation, and again, it doesn't happen every day. It's just something to keep in the back of our heads. Okay, so 9:30, we get big displacements to the downside, and instantly that just tells us that going long might be problematic, right? If we wanted to see price go higher, 9:30 would have been a great time for the market makers to do it. Since there's so much liquidity, it's just better to go higher if we are to go long. It's just better to go higher if the true sentiment was to go long. However, that didn't happen and we get movement to the downside. So right now, we're still not at this level and it's not a strong short yet. The best thing we can do is kind of just wait and see what happens for the first half hour after equity. Okay, so at 9:35, right after equity, we see a strong move towards the upside where it respects this level of the 15-minute consequent level from Monday to the tick, basically. It respects it to the tick. Now, what that tells us is that if we wanted to go higher, it would have broken above it and the candles would have eventually moved higher. However, that didn't happen. It just ran up, it touched it, instantly wicked back down. So now we can kind of be looking to short. And even though our original thought was to go long and go higher, it is completely fine to change your mind based on what the market says, right? The worst thing you can do is to completely ignore what the chart is telling you and just to force your emotions onto the market. You really don't want to be doing that. To look at some targets, we could be on a 15-minute chart. We could have this swing low from the Asian session at 4:30. We could also be targeting this swing low from Monday session, as well as this swing low from the weekend. So right now, we're not too sure how deep we can retrace. This would be our main target. We can take 70% off here. This area, we can take 20% off, and then here, we can take the entire position off. Again, we're just taking partials because we're not sure how much it's going to retrace. Now, back on a minute chart, we see that at around 9:40, there has been a gap, ICT's fair value gap, as well as an order block where there's displacement to upside. We see a candle of the opposite color. This whole candle can be an order block, and it's just an area of retracement, an area of strength or weakness. So here we can use it as an area of strength, and we can have a short position here with stop loss at this consequent encouragement level, where we're probably going to be wrong if it does hit, and the targets would be all the way down here with a 1 to 2. Second targets could be here, leaving us with a 1 to 4. Okay, now with that being said and with the trade being set, let's see what happens. Okay, so we do hit our targets. We hit our main target of 70% of the position, and we also hit the target of the other 20%. So 90% of the position has been closed out, which is very nice, right? This has been a very good trade. However, before that even happens, we almost get stopped out. And that's not something to really gloss upon, right? We want to see what happened here, and is there any way to kind of improve this? Because when you're trading this live and you see price withdraw so much to your stop loss, it can get uncomfortable. And this is also why it must be very, very important to place a good stop. So our stop was at this 15-minute consequent level, where we have already determined to be a key level of importance. So if price does hit this level, we're completely fine with getting out and being uncomfortable shorting. However, as long as it doesn't hit, we can hold the position comfortably, expecting price to keep going lower, because nothing has changed about our decision to go short. The worst thing you can do is see price retrace, and even though we haven't hit this level of consequent encouragement, is get out early, right? That'll be half-assing a trade, and in this industry of day trading, half-assing something is one of the worst things you can do. So yeah, there you have it. Two very, very nice levels of using market sentiment, using time and key time events to formulate trade ideas, paired alongside concept of liquidity, and this really shows you how precise and how consistent you can get by doing this. Anyways, that's it for me today. I hope you guys found this insightful, and have a very, very safe trading week.